Hi, welcome to Elements in Focus. What is an annuity? That is what we're going to be talking about today. If you are tuning in for the first time, this is where myself, Aaron, and any one of our advisors break down our five critical elements on a weekly basis. As you can see on the screen, today we're going to be talking about risk management and life happens. And we want to get really, really basic on some of these topics. So, today I've got Grant Thompson, who's a certified financial planner and also has the CKA Certified Kingdom Advisor designation with me today. So, welcome, Grant. How are you and what's new in life?
I am good, Aaron. Not a whole lot new in life. I guess the one major thing, and let's see, a couple months, I should be expecting my next child. So it's a boy. So we're really excited for that.
Nice.
Um, I'm,
Congrats.
Thank you. I'm looking forward to um, hopefully not getting much sleep. I really missed that, so I had to run that back and do it again. So we're really
Definitely.
excited. So that's what's new with me. How are you doing, Aaron?
I'm wonderful, man. I always get to enjoy doing these and love breaking down different types of topics. The annuity side of things is an insurance product. And so that falls under risk management. But also, as Grant said, just a shameless plug if you're having a new baby or welcoming a change in your life, it is a wonderful time to start evaluating the insurance piece or the risk management piece of the five critical elements. And so, Grant, I'm going to turn it over to you. Let's dig into annuities and see where this conversation takes us.
Yeah. So Aaron, as you know, we get a lot of questions in our meetings about what is an annuity? Is an annuity right for me? And so, as always, it depends.
Yeah.
And so, simply put, an annuity, you are taking a lump sum of money and you're putting it into an insurance product. So that could be cash. A lot of times, people will use like an IRA that they put into an annuity. It could be a Roth IRA. And what you're doing is you're transferring the risk essentially to the insurance company for a guaranteed payout or a monthly income stream. And so there's many different types of annuities. And so I don't want to get into all the different types. Again, that's going to depend on your situation. But some of the pros of annuities are exactly what I just said. You are transferring risk to the insurance company to give you a monthly income stream. Um, a lot of them will have floors, and what I mean by that is they might say, "Hey, you can't earn less than 3% in this account." And so it's really important to pay attention to the payout schedules on those annuities. Each one of them is going to look a little bit different. Some of them are going to be straight life. Some of them might have a survivorship annuity to it. And so it's really going to depend on your situation, which one works for you. Some cons of annuities are they can oftentimes be expensive, and you don't really know that up front. It's really hard to tell what things cost. It's really hard to tell the total cost of the product itself. And so one of the things is cost. The other thing is you may not get the growth that you're looking for in the account. You may not need that income stream, and so you may not get the upside that you would otherwise get in a different type of account. Um, and so, really, when it comes to, hey, should I have an annuity? What kind should I have? Again, I'm going to tell you it depends. It depends on your situation. Sometimes people need an income stream and it makes sense for their situation. Other times it doesn't make sense for their situation. And so I would really encourage you to look for a professional that can really take a look at your situation and see, hey, this makes sense. This may not make sense. And really look at the whole picture of everything because it's not as simple as just saying, hey, I need income. I'm going to put money into an annuity. And so I would really encourage you to kind of take a holistic view and make sure you're getting a professional's opinion on that. Aaron, anything that you would add to that?
Yeah, a couple of things. There's a lot of variables to annuities, pun intended. There is a variable annuity type contract. As Grant mentioned, he scratched the surface of just the pros and cons of the annuity contract. Another con or another disadvantage potentially is a surrender charge. And so if you have any sort of liquidity needs, in a short period of time. A lot of times, annuity contracts will have a surrender charge, and that is different per carrier. So depends on the type of contract, depends on what type of annuity that you're choosing. And what that simply says is if you were to take money outside of the contract and fully surrender it, you would pay a certain percentage. I've seen surrender penalties as high as 10%, sometimes higher than that, and then they gradually start to decline over time. Another thing is an annuity is just a tool in the toolbox of different tools that we have as advisors. They're not inherently bad. But what I've often said, and I spent the world a lot of time in the insurance world in my previous career, more often annuities are sold than bought. So if you walk into your bank and you're introduced to the bank advisor there, sometimes their solution in addition to a CD is, here, let's put this into a fixed annuity, or let's put this into some sort of annuity contract. Really just kind of put your guardrails up. It may or may not be a bad thing, but without knowing your full situation, especially when looking at it, if they don't look at your tax return, things can be a very maybe rocky solution. And so one other con to an annuity, Grant, I'm going to toss it back to you, but how is income taxed if it's not in an IRA?
So if it's not in an IRA, really, when you look at the IRA, obviously anything that comes out of that's going to be taxable. And
Correct.
so when it's not in an IRA, what you have is called a non-qualified annuity. And so what that looks like is you're going to have what's called basis. Okay. And that's basically the money that you put in there. So let's just say you put $100,000 in there and it grows to $150,000. So your basis is 100, your growth is 50. And so when you start to take money out of that, what they're going to do is they're going to take the growth first, and that's fully taxable to you until you get it down to the basis again. Now, once it gets to the basis, obviously you can do, depending on the contract, they might have surrender charges. That's tax free because again, that's your contributions. But still, it's when Aaron mentioned looking at a tax return, there's many different variables to that. And a lot of times when you lock into an annuity, it's really hard to control your income and it's really hard to do any kind of planning with that. So Aaron, does that answer your question? Is that where you're headed
Yeah,
with that?
so
Okay.
you're exactly right. In the way that it's taxed, as Grant mentioned, it's called last in, first out. So those last dollars of growth are taxed, but they're not taxed at capital gains rates like some other type of investment vehicles. It's taxed at ordinary income, which is your marginal tax bracket. So whatever bracket you fall in, that's where those gains would land. And so you have to be very, very cautious when you're evaluating those things. You get a favorable rate a lot of times with capital gains. If you're in the 12% tax bracket or below, you pay 0% federal capital gains. And so adding an annuity contract, if you're in the 0% bracket, may or may not make sense. And so if you are thinking about purchasing an annuity, if you have annuities that you want reviewed, we do this all of the time at FEG. As you can see on the screen, it's our fourth out of our 5 critical elements. Please reach out to us. Schedule a meeting. You can come in for a complimentary meeting. That is where we'll take 90 minutes, review your specific situation, give you things to think about immediately. If we decide to partner together, we'll give you things to think about in the future and a written plan on what we're going to do for you inside of your specific journey. So the way to reach out to us, you can see it on the screen. It's 800-928-4001. One of our team members can get you on our advisors' calendars. Send questions to talktofeg@yourlifeafterwork.com. Scan that QR code. There's numerous ways to access us. We're always ready, able, and willing to help. So thank you so much for watching. Have a blessed day.